The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Today's episode of Market Talk is brought to you by Growmark FS. Keeping up with the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic, grain, and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. Well, let's take a look at the market trade after Monday's session. Plenty of headline risk in these markets coming out of the weekend as we watch what's happening in Wall Street with the bank failures and much more. We're going to throw in a few things supply-demand wise, fundamental wise, we need to take a look at. Also, joining us here today to discuss the markets, we welcome in our good friend John Heinberg with Total Farm Marketing. John, hope you had a good weekend. Was an okay close on Friday, but then coming in here Monday, just all this headline risk in the market, everything with the Silicon Valley Bank and Signature Bank, and just what's the Fed going to do? What's the FDIC going to do? That really kind of kicked us off on a sour note here to start this week. Pretty much just across the board, commodity, stock market, et cetera, John.
Yeah, very much so. I mean, the overnight trade into the 745 pause on grains was not very pretty, at least in terms of the corn market. And, we saw crude oil down $4 a barrel, stock market almost 400 points lower. Now we've, seen some pretty big swings today. So a lot of different questions out there regarding that Silicon Valley Bank issue. Obviously the FTC stepped up, said they would back some of the money that was needed to be pulled out and, gave some support to that. I think that eased the market a little, but at the same time, it kept the fear factor in place. And you saw some of those riskier assets at least kind of get sold off in that regard. We'll have to see how it plays out. Is it the beginning of the end? Is it the precursor to more to come? Who knows? Those questions will get answered. I think after we kind of got through that shock, the media, at least in terms of what I've been seeing today, has been kind of downplaying it a little bit more. President Biden made his comments basically saying the banks are safe this morning, and I think just put the market a little bit at ease and at least allowed us to come off the lows in some of these markets in general today.
Well, and to your point, it's, the facts versus the perceived facts. And I think some of those perceived facts is what gave us just some of that downside momentum, especially in grains, at least quartered soybeans on the day, and even in the livestock trade too. You got to balance that perception versus reality here, John.
Very much so. I was actually just thinking those two words in my mind as you were talking there. Again, that's what markets trade on. It's perception, versus, again, the reality side of things. And, you go look at a corn market and one that's, I'm not bullish corn at this time frame just because of the way the money is flowing and just kind of the situation that we have. But realistically, that's just where the perception that, we're growing supplies, things are getting heavier. USDA made a cut on demands, carryout goes up. But in reality, things are still extremely tight, and that's just going to keep, these markets extremely volatile and very headline driven. I was talking to a few clients here today, just basically saying, by the time we get to harvest next fall, I can give you multiple reasons why we could be at 450 or we could be at 650 at harvest. And so how do you manage that? And that's some of the things we were having long conversations about today going forward here in terms of especially that corn market.
Well, because we think about the headline risks here, John, and that's one thing, but we also have a lot of different supply and demand fundamentals out there, whether we're trading them or not here. We really didn't last week and might not be necessarily here to start the week, but they're still out there in front of us. So to your point about managing some of that risk, having those long conversations, they're very important. I think just in corn, since you hit on that, it looked like we were maybe getting some funds, liquidating some more corn long positions on the day, Monday as well. Seeing D's corn on Monday closing at 557 at a quarter. The old crop contracts hovering right above 6. I mean, we're starting to see a little bit of a breakdown and plenty of chart damage in this corn market, John.
We had quite a bit. Now, Friday actually was a fairly solid close. We came off those lows, put a bit of a reversal in. Would love to see some fall through the day. But the fact that we started the day down 7, 8, and we ended up down a penny or 2 or 3 cents here, on the old crop, and actually a new crop only down a half a cent on the settle. That's a little bit encouraging to me. I mean, I'm not saying we're taking off and going anywhere, but at least maybe we got some stability here at this time frame. I mean, obviously it's Monday and things can change as soon as we wake up tomorrow morning, and I'll be eating my words here a little bit. But, I just like the way things kind of acted. Now, what am I watching? I'm watching what's going on with the cash market. Multiple producers said their basis levels improved after this last few days. That tells me that there's still some need for corn out there. I'm watching export inspections. Those numbers were a fairly good number again today, telling us that the corn export window is open. I'd like to see some sales come in, but I think the market's going to be very hand to mouth with $6 plus corn on the board and what the international perception of the market is. So, so with those things kind of being said, are we in a window? Maybe corn can get a little footing here. Now, I'm not jumping up and down and saying, hey, we're rallying 60 cents. But if we can find 20 to 25 over the handful of days, that's a place sellers should probably step back in and move a little bushels if you've missed out on some opportunities, or take a look at those new crop prices, 550, 560, 570. Given where we are in the global picture of things, is probably a great place to make sure you're getting some traction in terms of some of those new crop sales. Let's hope they're your worst. And then again, let's talk about how to manage the risk. This might be one of those years, the courage call or the fear of missing out call may be very important to the producer. And that's some of the ideas we were talking about today is, what can we get over top? A solid sale, make sure we got some reownership. If the market takes off, at least we're still participating. We got plenty of bushels to sell on that side as well. But at least, you got the courage to go ahead and make some sales at these levels and make sure we're locking in some type of value. Because like I said before, I could give you 3 or 4 good reasons why we could be at 450 corn by harvest, and then you're going to be wishing you would have sold 550, 560.
Yeah, and some of those things you mentioned, and obviously, growers can get more in the weeds with that with you on a call or an email, but obviously there's plenty of different strategies out there to try and help you manage that risk, and that's so important. We talk about it a lot. Soybeans, John, little different there. I know we were under a little more pressure on the day Monday. You mentioned the corn export window opening up. That soybean export window looks like it's closing down finally. And I think that might be adding to some of the pressure here. What do you think?
Yeah, very much so. It was the time factor. It was coming. Now, tomorrow might be a very key day. We're back kind of testing those lows here from a week or so ago with the move today. Now, I'm watching that soybean meal market. Again, we know the funds have got a lot of length in that soybean meal because of the Argentina weather. This doesn't mean the Argentina problems are solved and things are over down there, but we're getting to the point now. The Brazilian beans are here. Maybe the end users have finally, got secure the supplies they need a little bit secured. Also saw an article today that, Brazilian soybean oil exports are at record pace for this time of year frame too. So, that weight on that oil market, which was down 70 cents plus today. And it just makes it real hard for beans here with that supply coming at us to just really keep some rally, especially given the premium of U.S. beans to Brazilian beans. So next couple of days could be very, very key here. Do we hold this area, which was those lows from just a week or so ago, or do we break through? And if we do, we got some more downside movement coming. The fund's got plenty of length they can get rid of in the bean market, so it makes me a little cautious here. Now, again, talk about managing risk. If that break does occur, again, we're still at 210 million bushels of carryover. That's not a lot. We throw a little prevent plant talk in. We got a lot of snow over the northern plains. Had a client said he went through southern Illinois today and things are wet down there. It's already the 15th of March, so that's going to be coming into the news front real quickly, and that bean market could react fast. So might be our window. We re-own some of them early sales.
Well, and to your point there too about just some of the weather conditions, mid-March, I mean, we're going to be rolling planters soon in many locations. I heard a lot of talk at Commodity Classic last week in Orlando. A lot of growers thinking, soybean prices are good. Maybe I'll put in a few more soybeans, but one has to wonder if something happens to this market, will they pivot? We know some farmers do have that ability to pivot quickly. Mm-hmm. I think that's up for discussion here. And one has to wonder the end of the month acreage numbers, will they be off from what growers were thinking even just, here on March 1st?
Yeah, very much so. And again, that first report we get, that one's just got a lot of wiggle room, for things to change, because that report's already kind of put together. It's the March 1st acres intentions or planting intentions, so they're piecing the data together now. And if a guy makes a change in his mind between then and, the report date, well, we won't find that out till June 30. So that's going to be a big number. I think the market might start thinking about those numbers coming forward. That's actually probably the plan, is that, and grain stocks will be the biggest thing in the market's place. And maybe we'll start hearing some of that chatter about things. Again, that's one of the reasons why this year you talk to producers and you hear it. They're just kind of confused. So make sure you're having those conversations in terms of how to manage a risk and keep your opportunities open one way or another. In terms of this marketplace, sometimes, like I've said it before, the cost of doing nothing can outweigh the cost of doing something just to help manage at least some of the risk that's in front of you.
Well, we are having a conversation today with John Heinberg of Total Farm Marketing as we take a look at Monday's trade action. John, let's talk wheat. We have some different headlines there to discuss. I know at one point, wheat was up about 20-some cents across all three complexes. And then when we settled things up on the day, we were up just moderately on the session across Chicago, KC, Minneapolis. But a lot of this appears tied to the potential extension of the Ukraine grain deal. What's the latest you're hearing there? And was that the biggest factor giving us some strength in the wheat market on Monday?
I think that's some of what we got here. Again, we're talking a heavily oversold market, heavy short position in this market. The global weathers, there's always a pocket somewhere. Let's keep an eye on Australia. If we're switching to an El Nino type environment, Australia is looking dry. They're a major wheat producer. They provide a lot of wheat to China. Does China have to step in markets in other places? That's some of the outside stuff, that's out there at the same time frame. But again, Ukraine Green Deal, that's obviously the biggest focus in the market. It's probably what's been pushing this market down, as well as just fund money pushing their short position here. And we got some talk today. Russia may be interested in go ahead and extending the deal, but only going to a 60-day window instead of the full length of the deal again. So we'll see if that comes together. Nothing's official yet, but it's all headlines at this time frame. And the market may have already priced in the majority of things, so that's why we're coming back, even though we're now in the window where what's considered a negative influence might still come together. We still got to keep an eye on what's going on in Ukraine. Yes, we've got the deal coming. They're moving bushels out, but we're getting into the planting windows real soon here. Acre projections are out there. And again, they're just not going to have the ability to put the crop in that this market may be anticipating, nonetheless even get it shipped. And that's still going to be a long-term supporting factor here, just beyond the war. The war part, unfortunately, the market has kind of moved beyond it because it's not a headline event unless there's something seriously affecting the shipping areas. But again, just where they're going to be on the bushel front as we get to the next year's harvest with that crop, just going to keep that global supply a little bit tighter, which will probably still keep some support in the market longer term.
Another thought as well, too, added on to all of this discussion is the winter wheat crop out of dormancy here, poor conditions in Kansas. I have to think that eventually that's going to really catch up with this market. And maybe we priced some of that in already, but I have to think if we continue to have just a dismal crop out there, it's gonna do something more here in this KC wheat market, especially.
Yeah, I'm in agreement with you there. Maybe we got to wait till we get the official USDA ratings as they start coming out here in April. But you see some of the university ratings and the quality or the lack of quality that we're seeing in that crop. Some areas have picked up moisture, but not enough, in terms of helping out getting this crop going. The biggest thing that's still on my radar with this market, again, we don't know what the true commitment of traders numbers are. We estimate they're sitting on a very large short position in that wheat market. If something were to happen in terms of the weather here, or the Ukraine grain deal falling apart, or something along those lines, and those funds feel like they're on the wrong side, the volatility that could be in that wheat market is extremely high. Obviously, that would trickle right into corn again. Another one of those reasons to have risk management positions in front of you, because tomorrow morning we could wake up and this thing be a totally different story, and the funds need to get to the sidelines quickly, and that could help out that wheat market. Again, maybe that was some of the reason we were higher today because of the Silicon Valley Bank situation. They've got a lot of gains there. They got a lot of risk there. Let's thin some risk out. You do get out of shorts by buying the market.
John, let's talk livestock. Let's start with the cattle market. Across the board, cattle and hogs, we were under pressure on the day on Monday. We came off some of those lows, though, it appeared, especially in the cattle trade. I have to wonder, was it outside market pressure the main culprit, or was it seasonal? What were you thinking in this cattle trade on Monday? Why were we down the way we were?
Seasonally, cattle market's got me a little concerned here that we've kind of maybe put our winter high in. Okay, cash trade last week, mostly steady with the previous week. I don't think the market liked that very well. You look at the chart, it looks tired, especially in the front months. It doesn't say we're going to roll over and take a big chunk of premium out here. We're still in an uptrend. We still got the fundamental pictures the same in terms of the tight supplies. Demand continues to be fairly strong domestically, but it just feels like a window where the market's been overbought. Again, we talked about where a market is leaning, a lot of length in the cattle market here. Again, not sure where the numbers are exactly, but they were buying pretty heavily into the last couple of weeks that we do have, commitment of traders numbers. So it's probably a spot where they just said, hey, let's take a little money to the sidelines, see where this wants to go. Again, I'm going to be looking at opportunities for producers as a re-ownership window in here of cattle they may have moved and locked in for the June, July, April window here, as maybe get some calls over top this market, because again, the story is still the same. Now we get to the grilling demand window and things start heating up again. We want to make sure we still got some presence over top and moving those cattle prices higher for producers. So, but again, still a great window. Look at the value, see what's out there, think about long range puts. Make sure you're protecting the floor. We don't know what's going to happen a month from now. Maybe the Silicon Valley Bank thing was the beginning of something happening. And if we fall into a recession mode or we see continued struggles on that side of the sector, the cattle market will be one that will suffer.
How about the hog market? Was that seasonal as well? Do you think there's some different fundamentals at play? Is it just the hog market being the hog market here like it has been as of late? John, what do you think?
Yeah, no, I mentioned that in our prior conversation, and I kind of agree with you there. I think it's just the hog market being the hog market. I think the low's in for that April contract. We continue to see the cash index trend higher, which is encouraging. In retail values, finding some pretty good footing here, so a little bit of work to do. But April isn't going to get away from the index. We're still $6-7 above the index here, with that gap occasionally narrowing. And I just think every now and then the traders say, let's take a little premium out. We had a good week last week. Hogs finished nicely higher off the lows. So I just maybe wanted to square it up a little bit, especially with the outside risk going on. I like where hogs are in terms of at least the trend here. Probably a little more cautious of the summer hogs, even though they kind of had a nice close last week as well. But, we got a pretty big spread between the April and the June, the April and the July. Does that need to narrow up? Probably does. So maybe that $102 hog in April or June looks pretty good right now in terms of making sure you got a floor under it of some form. Just in case that cash market flattens out again and that June contract's got that big premium and needs to come down.
About the dairy trade, John, looking fairly quiet, mixed there on Monday. What are you seeing as we start off the week?
We put a fairly good double bottom in on some of these charts around 1740 on the April. Still seems to be holding. We kind of fell apart a little bit at the end of last week and the start the session today, and also the buyer stepped in again. So that's a little encouraging. Cheese trade starting to pick up again, at least in terms of value. It's Final Four season now, so here comes some more cheese pizza demand. So we'll have to see how that plays out. As long as we can kind of hold above that 1740 level at least and keep that double bottom in place, technically the charts are improved. But I'm not saying we're off to the races here by any stretch of the imagination. It's a market that's still dealing with a heavy supply in front here, at least in terms of fluid milk being produced, and just still some questions on demand that need to hopefully straighten out a little bit more and give this market some support.
Well, John, great thoughts as always. Before we wrap it up, any final thoughts for us? Anything else you want to reiterate here on today's show?
I kind of talked about it multiple times about talking about the risk management side. Again, we've got situations here in all these markets where we could be one way or another very, very aggressively, just based on the supply and the demand. And then there's just so many things moving here. I'm a little leery of locking in things in terms of price without having some type of price flexibility, either upside or downside around you. So make sure you're having conversations with people, whether it's your banker, whether it's somebody like myself, the elevator, the packer. Just make sure you got a plan and stick to it, because it's going to change on a daily basis.
Well, John, if folks want to reach out to you and get some advice there at Total Farm Marketing, what's the best way? I know you guys have a lot of great ways to get in touch.
Sure. Give me a call, 800-334-9779. Shoot me an email, jonh@totalfarmmarketing.com. Don't forget that website of ours, totalfarmmarketing.com. Again, a lot of great information for producers out there. As I said before, it doesn't cost anything to pick up the phone and ask questions. I'll gladly chat with you. and just see if there's something we can help you out with.
John, thanks so much for the time. As always, have a great week, and we will talk to you next week.
Sounds good. Have a great week.
John Heinberg with Total Farm Marketing joining us today. That's going to do it for Market Talk. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.